the next thing that I'm really, really thrilled to be talking with you about is the world of secondaries. Because a lot of students over the past, I would say probably even the last 3 or 4 years in particular, have started saying, hey, Max, like I want to get into investment banking and specifically I want to work in PCA, private capital advisor. I want to work in secondaries. I want to work on these other types of deals. And so for those of us who are like weren't familiar with this, like walk us through what is PCA, like what does that actually look like? What do you do on a day-to-day basis as a PCA banker versus like a traditional like M&A investment banker?
Yeah, happy to provide that color. I didn't really know that much about private capital advisory when I started. I do think I had a sense that there were a lot of private equity firms that had raised a lot of money, and that was really starting to expand, and that there was going to likely be a reshuffling of the LP base, over the course of the next 10 years, as there were just more and more private equity firms in the landscape expanded and expanded, and that's certainly been true. So at its core, everything, literally everything in secondaries is driven by the fundamental liquidity problem that private
Mm-hmm.
assets have. Where
Okay.
fund managers will raise capital for a fund, they'll invest that into private assets, but it's not that easy to withdraw your capital. And LPs in those
Mm-hmm.
funds may want to receive their distributions faster than the GP wants to provide them or is able to provide them. So in secondaries at Jefferies PCA, we really work on two primary types of transactions: LP led transactions and GP led transactions. And
Mm-hmm.
so think of this as, uh, for our client, which
Mm-hmm.
kind of type of client are we working with, who is leading the process?
Yep.
If it's an LP, then typically that sits in the realm of we're doing a fund transfer. So they have, a fund interest or several, a portfolio of fund interests, and they want
Mm.
to divest those
Yep.
interests, or a portion of them, to another buyer. From the GP led side of the coin, that typically means we're working with a sponsor, or a private equity firm. And there's a variety of different transactions we can do for them. A very
Mm-hmm.
common one are continuation funds.
Yep.
I think the simplest story for a CV is if you have an asset that you really quite like,
Mm-hmm.
it's performing
Mm-hmm.
very well, and maybe it's past the time where your LPs are ready for liquidity, but
Yeah.
you as the manager continue to feel like a buyer of this asset. Then rather
Mm.
than sell it to a third party, at whatever discount rate is available in the market, you may want to create an SPV and transfer that,
Mm.
to the SPV that you manage,
Mm-hmm.
giving your LPs the option of whether they want to
Yeah.
take their
Yeah. Yeah.
liquidity, or if they want to roll. There's a variety of other transaction types that we do as well, but they broadly fit within those buckets.
Mm-hmm. Okay, gotcha. So you're speaking like a true expert here. You just gave us a ton of detail. Simplify it for us in one sentence, like what is PCA?
It's driving liquidity for private markets.
Driving private liquidity for private markets. Okay, I love that definition. So from my understanding of it, it's coming from this concept that PE firms, private equity firms, they raise these massive funds, they buy private assets, and it's hard to sell them, and therefore the PE firm, aka the GP, the general partner, needs to get money back to the people that invested in the PE fund, aka the LP, the limited partner. And so there's this complex ecosystem. You need bankers to facilitate that. And so, in terms of understanding like who your clients are and what types of liquidity or strategic challenges they're trying to solve, you talked about like continuation vehicles, but give us a few more examples. Like, who are your clients in private capital advisory, and what types of liquidity and strategic challenges are you helping them solve?
One example is a pension, that I've done work with, and this is a very common story in the market right now, that's over allocated to private equity as an asset class. A lot of pensions have become victims of their own success. They were kind of the original backers of private equity
Mm-hmm.
in its day, and some of their allocations have really grown and expanded to be significantly higher than,
Mm-hmm.
even billions of dollars higher than kind of what they intended. So I've done work, really with multiple pensions to help reduce their
Mm-hmm.
allocation to private equity. We have, like I mentioned, GPs that have
Well,
assets
and
that they
just to
really
clarify on
like
that
that
point
have.
first,
Yeah,
if I can step in for a second, then I want to hear about this next example. It's like
for sure.
basically when you are an LP, like a pension fund, it's you're trying to make sure that you've got an equal portfolio in the same way that you and I have our own investment portfolios between like real estate and bonds and stocks and things like that. And so this is a trend that I've seen a lot of times working in PE is the funds in PE return more than the markets, and therefore like the slice of the pie that is PE grows. And so you're saying that you help them get rid of some of that pie to be more normal, quote unquote. Am I understanding that correctly?
Right, right. Yeah, if an asset
Okay.
outperforms and you start with it, you give an allocation in mind, then you're going to eventually need to divest that asset, or you're going to need to become comfortable with that asset just continuing to be larger than you want it to be. So,
Hmm. Gotcha. Okay, gotcha. Didn't mean to interrupt, but yeah, I'd love to hear some of these other examples you were mentioning.
no, you're that's really fine. Maybe one other that I'd mentioned that's become kind of a hotspot lately are fund tenders and tender offers, which is kind of a cross between a GP led and an LP transaction where you work with a fund sponsor. And this works best when they have a large fund base, a
Hmm.
substantial amount of NAV, and investors that are ready to start receiving liquidity from that fund. And what you can do is rather than going individually to each LP and having them run their own transfer processes, you can conduct a
Hmm.
private tender offer where you go out to every LP in the fund and give them the option for liquidity. In tandem with that, you can also have them commit the buyers coming into this vehicle. You can have them commit to the GP going forward and establish an ongoing relationship, which I think is really beneficial for all parties. And then, the other examples are CVs, which continuation
Hmm.
vehicles, which have become extraordinarily popular over the last 5 years. I mean, by the time I started in private capital advisory, there really were hardly any CVs. I mean, the volume from LP transfers vastly dwarfed anything that was done in continuation vehicles. And
Hmm.
nowadays, the question is like, what asset can't have a continuation vehicle done on it? More so, and it's become a very regular way approach for the market. So really, any time that a sponsor is considering exit options for a given asset, particularly those that they like, a CV is now on the table.
Gotcha. Gotcha. Okay. So we've talked a little bit about like what PCA is and like some of the different examples here. A question that we definitely need to get out there though is like why build your career in PCA? Why would an analyst who comes to me today, like why are so many students coming to me and saying, Max, can you help me break into PCA banking? Like what's the draw?
Yeah, I mean, the first thing is just the growth of the market, and that's led to an environment where a lot of people have made careers and made very successful careers in private capital. I think people are very enabled to take on new responsibilities in a way that maybe you're not if in a group that's not growing quite as much. I was talking with an analyst the other day who was just talking about all the things that they're able to do and the responsibility that they're able to take. And I was saying, really, in my career, I don't know that I've ever seen somebody who is able, is capable and able to take on additional responsibility, not be enabled to do that. So I,
Yeah.
I don't know whether that's more a function of working at Jefferies or if it's more a function of working in a growing market. But
Hmm.
it includes both. Um,
Hmm.
the other thing that I'd say is that uh, working in secondaries because it's new to some extent.
Hmm.
There's plenty of times that you're working with GPs that have never had a secondary before in their
Hmm.
history. It's a dynamic part of the market, and you're to some extent figuring things out
Yeah.
as you go. There's been quite a few instances where maybe we're putting together a model or we're trying to figure out how to handle a very tricky or nuanced situation, and we look at what precedents that we have, and there's really none. You're having to figure it out from ground zero,
Yeah.
based on first principles, and that's something that's very exciting. So
Yeah.
in some ways that we're architecting still the nature of the secondary market, and the market still is expanding and growing, and so every year you see new structures and new teams and new ideas coming into the market, and it's a very exciting
Hmm.
place to work.
Wow. Yeah, no, I'm very intellectually intrigued personally, where that does sound like a ton of fun to me as someone who likes to use my brain as I'm thinking about finance concepts and building financial models and stuff, just to like think about the creativity involved almost. And so I understand
Yeah.
why so many analysts are interested in it. Like from my perspective, people are excited about PCA because it's like intellectually interesting. A lot of students are just super attracted to the growth that you were mentioning, where it's in some ways there's a tailwind in building a career in banking where you're just going to be more likely to succeed. You're going to do more deals. You're going to have a more successful career if you choose to join a segment of the market that's growing instead of something that's like totally belly flopping. And so it's kind of common sense. But the other reason that I think a lot of people are interested in PCA, and I know this doesn't apply to you, is for those who are interested in going to the buy side eventually, it kind of gives you unparalleled insight to a lot of these private equity firms and a lot of these buyers. And if you ever want to go work at an LP, it gives you those relationships. And so students are crawling all over this these days because I think they see that potential and that interest. And so, what advice would you give to a student today if they were to call you up and say, "Hey, Carson, like, how can I break into private capital advisory?"
Yeah, I mean, I think the most important thing first is just to gain a very basic understanding of what it is. So, listen to
Mm-hmm.
this podcast, go on Wikipedia, read the market reports that we put out. I know Jefferies, in particular, does a great job of putting out a market
Mm-hmm.
report every 6 months. I've contributed to those for quite a while, and so read what we're writing and what we're saying about the
Mm-hmm.
market. Um, Go on ChatGPT or whatever your favorite AI platform is, and ask it about secondaries. I've found that it actually has started to do a pretty good job
Mm-hmm.
recently in telling you about it. And then the next thing is to reach out and connect with professionals in the market.
Mm-hmm.
I'd say be tactful about how you're doing it, tailor your introductions. But
Yep.
it's certainly I think given how fast the market is growing, I think you can expect that there's going to be a lot of new analyst positions going forward, and still a great opportunity for many more people and young faces to make careers in the
Mm-hmm.
secondary market. So, um, I think those are kind of the first steps. And the other thing that I'd say, and this is, it kind of depends on who ultimately is interviewing you, but I think it's helpful to understand the basic mechanics of a fund waterfall, right? I think you should understand what carried interest is. I think you should understand what management fee is, what the hurdle
Mm-hmm.
rate is, what the GP catch up is, and how those all
Mm-hmm.
interact together, and be able to answer questions about them. Now, are you going to get question? I don't know. It'll depend on who the
Mm-hmm.
interviewer is, but I think that understanding some of the more technical nuances
Yep.
as a college student, it's like one of the best times to
Mm-hmm.
go and understand that and drill that in.
Yeah, yeah, yeah. Well, and you just said a bunch of words there that, frankly, I still have a hard time sometimes wrapping my head around the complexities of these waterfalls, even after building fund waterfalls from the inside in private equity. And so that's something we'll have to get you back on to explain a little bit more detail at some point. But tell me a little bit more about Jefferies specifically, because a lot of my clients, they do say that Jefferies is like one of the top, if not the top investment bank in secondaries these days. And like I was saying, it's grown rapidly in a rapidly growing industry. And so it's kind of just a recipe for success. But am I correct in remembering that Jefferies has done over $20 billion of LP volume specifically in 2025 alone so far? And like, if so, what's driving that macro growth?
Yeah, that's right. And I think we've done collectively more than 50 billion as a team
Wow.
just in 2025 alone, which is really kind of insane when you think about it.
Yeah.
Um, I mean, that's larger than the entire secondary market was just a few years ago. Um, I think Jeffries has done a few things very right. I think on the GP led side, which is definitely an important component of our business, we have approached the market in a fully integrated way. Some of our competitors, I think, will focus on this market just with the private capital teams,
Hmm.
and that approach works sometimes. But what you miss out on is the deep insight that you get into the underlying assets, particularly for
Hmm.
single asset continuation vehicles. Um,
Yeah.
when you're actually building sims and marketing them, because the reality is, for most private capital advisory bankers, you're a generalist, right? You're
Mm.
a a product specialist in the secondary market. And we found that approach has really resonated with
Mm-hmm.
sponsors, and it's led to substantial market share gains
Mm-hmm.
on the GP led side. Um, on the LP side, what I'd say is we never deviated from our roots. Our roots
Mm-hmm.
come from the legacy Cogent team, who exclusively focused on LP secondary market transfers, and built a career and really built that market. And we've not deviated from that. That's we still have a very large team that's exclusively focused on LP secondaries, and that's a major focus for us. Others, I think, have become distracted from the LP secondary market,
Mm-hmm.
and have focused on
Yeah.
the GP led market. Um, and both really are quite important. And I think what we find is that there's a flywheel effect of information that comes when you are deeply embedded across every aspect of secondaries, that makes it so that a new GP or a new LP so frequently chooses Jefferies as their partner and advisor when going about a new secondary transaction.
Fair enough. Fair enough. And so, what about the macro trends, though? Like, we've discussed personally some of the other things earlier, like the growth in PE, and that's driving a lot of like the liquidity problems. But talk to me about some of the other things that are driving this market right now.
Happy to do that. I mean, fundamentally, like, we're market makers, right? So there's the two
Mm-hmm.
sides of the coin. There's the sell side, what's driving sell side demand, and then there's what's driving buy side demand.
Mm-hmm.
Um,
Hmm.
the single most important factor for sell side demand is just the lack of distributions that are
Hmm.
coming out of private equity and other asset classes. And so the amount of older tail end funds in the market, it really just
Mm-hmm.
continues to grow.
Yeah.
Private capital generally is expanding, but it's not exiting at quite the rates that
Mm.
you'd like it to.
Yeah.
Everybody's waiting for the mythical time period when M&A and IPOs are coming back for private equity sized firms, and maybe that will happen soon. But in the meantime, we have the secondary markets to provide liquidity for LPs that want it from businesses that are performing in many cases, but just don't aren't being exited. So that's
Mm-hmm.
on the sell side. I think is primarily groups just wanting liquidity. On the buy side, there's really been a massive amount of growth in dedicated secondary
Mm-hmm.
capital. So these are
Mm-hmm.
funds that are specifically targeting the secondary market and
Yeah.
specifically targeting LP or GP led secondaries. Um,
Hmm.
as a result of that, there's been increased competition that tightens underwriting, lower cost of capital, better prices. All of that is quite good in
Yeah.
terms of bridging the bid ask spread. Very
Hmm.
importantly, there's also been the rise of retail capital in 40 Act funds. Um,
Hmm.
uh, so, that within 40 Act funds, there's quite a lot of
Sorry,
capital
what
that's
is a
kind of
40
come
Act
into the
fund for those
market.
of us who aren't familiar with this legislation? Just break that down for a second.
Right. So 40 Act funds are perpetual funds that they can have a portion of their assets invested into by private equity. Um, and the goal with 40 Act funds is that liquidity is kind of more accessible. And so you can have inflows and outflows on a more regular basis. And it's accessible to retail investors, not just
Mm-hmm.
pensions and endowments and
Gotcha.
foundations.
Mm-hmm.
So you have a massive number of RIA clients
Yeah.
who are going into 40 Act funds and are now able to invest effectively in secondaries. Um,
Mm-hmm.
that has really driven market volume over the course of 2024 and
Mm-hmm.
2025, where we saw
Yeah.
this massive surge because what you'd have, and this would happen all the time, we would get a call from a buyer in the market who has a 40 Act fund. They would say, I've got 500 million that I need to, I need to deploy. And
Mm-hmm.
the nature of 40 Act capital is very different from traditional closed end funds that call capital only when it's time to call. Because 40 Act capital is burning a hole in your pocket. You receive
Mm-hmm.
the cash right up front, and then you
Yeah.
need to invest it. And so there's a strong incentive to deploy quickly. Um,
Mm-hmm.
uh, that is continuing to drive market growth from the buy side, tighten underwriting, and
Hmm.
ultimately lead to more sellers being willing to sell because the prices are higher.
Hmm. Yeah. Okay. Makes sense. And so that's very interesting that there's two sides of the market. Both of them are sort of pushing at the same time. And so I guess it's no surprise that the overall market is growing dramatically. And so this has been extraordinarily interesting to hear about, like what PCA is, learn some of the things that you need to actually do to succeed as an analyst there, and about Jefferies and sort of the transactions that you might work on, the types of deals. And so